gas prices are more volatile compared to oil prices. And one of the reasons for this volatility is that demand can indeed depend on weather conditions. So this winter turned out to be relatively mild. And as a result, demand for natural gas was lower than expected, both in the US and in Europe. And this was the main driver why we revised the assumptions. But I also should say that in the context of European natural gas prices, prices are also relatively low because European market and European consumers has more or less shifted, and adjusted to the situation of reduced supply of natural gas from Russia. Consumers switched to a significant extent to LNG supplies, and also there have been a structural shift in demand. The structural shift, which we expect to continue, is driven by high energy efficiency and also as a result of a gradual energy transition.
Okay, so do you see it as an ongoing trend in the European market? Because now the level of storage in the European market is very high for this time of the year. Is it an ongoing trend, or it's something related to the warm winter this year?
The level of gas and storage is an indicator which informs us on the current supply-demand balance, and it's mostly as a result of warm winter and as a result of subdued demand. But going forward, in terms of a European natural gas market, we expect demand to be lower than expected before, but for different reasons. We cannot predict weather, obviously, but what we see is that there have been a structural shift in demand, driven, as I said, by energy transition and also energy efficiency. And at the same time, we see a significant increase in demand in the LNG market, which will be coming from Qatar and also US. And combination of those, as we expect, would potentially result in negative downward pressure on prices, which we expect would decline quite a bit from the current level.